Indian financial markets plunged sharply on May 9 as military tensions between India and Pakistan intensified, shaking investor sentiment and triggering a broad-based sell-off. The benchmark Sensex dropped by 971 points or 1.21%, closing at 79,363, while the Nifty fell 319 points or 1.31% to 23,954, marking one of the most volatile trading sessions in recent weeks. Investor wealth eroded by nearly rupees 5 lakh crore, with all 13 sectoral indices finishing in the red. Market breadth was severely negative, with just 431 stocks advancing while more than 2,600 declined, underscoring the scale of the sell-off. Volatility soared sharply as the Indian VIX index rose by 10.22%, closing at 21.01%, its highest reading since April 8. Meanwhile, the Indian rupee opened 14 paisa lower at 85.85 per US dollar, continuing its downtrend and recording a 1.03% depreciation so far this month. The market drop followed signs of escalation along the India-Pakistan border after India's retaliatory military Operation Sindoor. In the early hours of May 7th, India conducted a coordinated precision strike targeting 9 terror-linked sites in Pakistan and Pakistan-occupied Kashmir. The operation came in direct response to the April 22 terror attack in Pahalgam, Jammu and Kashmir, which claimed 26 civilian lives. India's strike was conducted using drones and guided missiles targeting facilities associated with Lashkar-e-Taiba, Jaish-e-Mohammed and Hizbul Mujahideen, all without breaching Pakistani airspace or harming any civilian or military infrastructure. However, the military response from across the border was swift. Pakistan launched drone and missile strikes on Indian positions in Jammu, Pathankot and Udaipur. Indian forces successfully intercepted all threats, but multiple cities including Jammu, Jalandhar, Hoshiarpur and Jaisalmer experienced coordinated blackouts. The capital Delhi was placed on high alert as shelling in border zones intensified, particularly around civilian areas. India responded again by the same day, striking targets near Lahore's Walton Road. 3 explosions were reported and Pakistan's HQ-9 air defense units were reportedly damaged. In a significant aerial maneuver, India downed 2 JF-13 fighter jets, 1 F-16 and a Pakistani AWACS, a key airborne early warning system, delivering a serious blow to Pakistan's aerial surveillance capability. India has maintained that no military or civilian targets were hit. Foreign Secretary Vikram Misri reiterated in a press conference that India's actions were purely defensive and a direct reaction to their provocations. No military targets were targeted, only terrorist infrastructure in Pakistan was hit. He also emphasized that Pahalgam is the original escalation and India only replied to that escalation on May 7th. Amid the geopolitical escalation, GIFT Nifty trends ahead of May 9 trading hours indicated a 296-point drop, setting expectations for a negative opening. Despite the initial flat opening, the previous day the Nifty experienced intense selling in the latter half, touching an intraday low of 24,150.20 before closing the session at 24,273.80, below the key 24,300 level. From a technical analysis perspective, Nifty is now seen with support at 24,000 followed by 23,800 and 23,700. These levels are expected to serve as base zones amid ongoing volatility. On the upside, 24,300 remains the immediate resistance, followed by 24,400 and a significant hurdle around 24,500. A decisive breakout above this range would be essential to revive fresh buying momentum in the market. The Bank Nifty index, reflecting the performance of major banking stocks, is expected to get support at 54,000 with additional cushions at 53,700 and 53,400. On the resistance side, analysts are watching for any bounce toward 54,600 followed by 54,900 and 55,300. Despite the turmoil, foreign institutional investors continued their buying streak for 16th consecutive session, pumping in rupees 2,007 crore on May 8th. This steady inflow signals confidence in the underlying fundamentals of India's macroeconomic trajectory. In contrast, domestic institutional investors turned cautious and net sold equities worth rupees 596 crore, reflecting internal concerns over the short-term outlook. Speaking on the current market scenario, Dr. V.K. Vijay Kumar, Chief Investment Strategist at Geojit Final Services, said, "Under normal circumstances, on a day like this, the market would have suffered deep cuts, but this is unlikely due to two reasons. reasons. 1. The conflict so far has demonstrated India's clear superiority in conventional warfare, and therefore further escalation will inflict more damage to Pakistan. 2. The market is inherently resilient, supported by global and domestic macros. A weak dollar and potentially weakening US and Chinese economies are good for the Indian market. The domestic macro construct is further rendered stronger by high GDP growth and a declining interest rate environment. These are the reasons why FIIs have been on a buying spree over the last 16 trading sessions. Adding to that, Anand James, chief market strategist at Geojit, advised investors to remain steady. Investors should not panic and exit from the market now, remain invested, monitor the developments and wait for the dust to settle, he said. Looking ahead, Anand James also noted that Nifty, closing below its 10-day SMA for the first time since April 1st, has triggered a potential breakdown move. According to him, this move could aim toward the 23,670 to 23,460 range, while value buyers may step in below 23,550. Sustained strength would require a clear move above 24,150. He flagged 23,850 to 24,050 as a volatile region likely to witness temporary spikes. Adding further caution, Hardik Matalia, derivative analyst at Choice Broking, commented, "Given the current market dynamics and geopolitical backdrop, traders should focus on short-term opportunities with disciplined risk management, avoid large overnight positions, and maintain strict stop-loss strategies. A breach below 24,000 could trigger additional selling, while a decisive breakout above 24,500 is essential to re-establish bullish momentum." Meanwhile, India has also briefed the United Nations Security Council and intensified diplomatic engagement with key allies. While the situation remains fluid, businesses, investors, and global observers are watching closely for signs of either de-escalation or extended confrontation. In this environment, the next few trading sessions will be crucial not just for equities but for the broader sentiment around India's growth story. Investors will be weighing military developments against economic fundamentals, monetary direction, and geopolitical risk. Stay with us on Business World Reports as we track the impact of Operation Sindoor, the strategic fallout, and the economic consequences. From market charts to boardroom decisions, keep watching BWTV for more such content.